Hey everyone, welcome back to Corporate Decoder, the place where we dig into the world of corporate filings. Today we are diving into a Schedule 14A filing, which is basically a proxy statement. It is like a company's yearbook, but instead of awkward photos, it's filled with information about votes, directors, and executive pay. And trust me, you'll want to know what these guys are getting paid for. This filing is from Core Natural Resources, a big player in the coal industry. It tells us all about their upcoming annual meeting, where shareholders get to vote on important stuff. We are talking about electing directors, approving their accountant, and of course giving a thumbs up or down to how much the top executives are making. The meeting is set for April 29th, 2025. If you are a shareholder, this is your chance to have a say in how the company is run. And even if you are not, it is always fun to see what's going on behind the scenes. This past year was a big one for Core. They completed a merger with Arch Resources in January 2025, creating what they believe is the premier North American resource company. The goal is to become the world's leading provider of coal-based natural resources. That is a pretty big mission. The board recently approved a $1 billion share buyback program, which aims to return 75% of their free cash flow to stockholders. This is a pretty big deal. They are promising to give a good chunk of their earnings back to the people who invested in the company. Most of it will come in the form of repurchasing their own shares from the open market. If you are a stockholder as of March 6th, 2025, you are eligible to vote at the meeting. Before we dive deeper, it's worth noting that the filing includes a section on forward-looking statements, basically a disclaimer saying that predictions about the future might not be accurate. Smart to do to avoid getting sued. Let's get to the good stuff. The board recommends that you vote for the election of directors, for ratifying the appointment of their accounting firm, and for the executive pay plan. Here is a quick look at the board. James Brock is the executive chair and Paul Lang is the CEO. The board is largely independent, meaning most members are not directly employed by the company. That is considered good for corporate governance because it provides oversight. The company is touting some impressive pre-merger financial results. They generated $226 million in net income and $655 million in adjusted EBITDA in 2024. However, it's important to understand what adjusted EBITDA actually means because it's a non-GAAP measure that can be prone to manipulation. The ratio of the CEO's pay to the median employee's pay is 93:1. That is lower than the average for S&P 500 companies, where the average ratio is around 2.5 and 2017:1. But still, the average employee would need to work almost a century to make what the CEO makes in a single year. The report talks about their corporate governance, and it looks pretty solid. The majority of their board is independent. They have a clawback policy to recoup compensation if something goes wrong, and they have stock ownership guidelines to align the interests of executives and stockholders. There are 8 nominees for director, all with terms expiring at this annual meeting. The board wants you to vote for all of them. James Brock, the executive chair, has been in the coal business for almost 5 decades. Patrick Kriegshauser chairs the audit committee. He's got tons of experience in finance and accounting. Paul Lang, the CEO, has been in the mining industry for more than 40 years. The next big item up for vote is the appointment of Ernst & Young as their independent accounting firm. The board recommends you vote for it, and they are expected to be at the meeting to answer any questions. In 2024, Ernst & Young billed them $2 million for audit services. It's a significant amount, but nothing alarming for a company this size. Finally, there's an advisory vote on executive compensation. This is where stockholders get to say whether they think the executives are being paid too much, too little, or just right. The board, of course, recommends a for vote. For the CEO, James Brock, 84.6% of his pay is tied to performance or the stock price. The company uses an independent consultant to help set executive pay. That is good because it should help keep things fair. Here is a quick rundown of the executive team. Robert Braithwaite is in charge of marketing and sales. Rosemary Klein is the chief legal officer, and George Schuler is the chief operating officer. The CD&A section digs into all the details of how the executives are paid and why. It is a good read if you want to understand what motivates the people running the company. They aim to pay their executives in line with market practices and to reward them for good performance. This should enable them to attract and retain the best people. They have a clawback policy so they can take back pay if executives mess up. They also have stock ownership guidelines so the executives have skin in the game. They paid Mercer, their compensation consultant, about $100,000 for their advice on executive compensation. They also paid Mercer for other consulting services, totaling over $5 million. They compare themselves to a peer group of other companies in the coal and energy industry. That helps them figure out how to pay their executives fairly. In 2024, they increased base salaries for some of their executives. Their short-term incentive compensation was based on company-wide performance and individual performance. They met the financial performance target that year, resulting in payouts to the executives. Long-term incentive compensation was given in the form of restricted stock units and performance-based stock units, meaning certain performance levels causes these stock units to vest. As management increases company performance, equity is released to them as well. It is a good way to align the incentives of the people in charge with the interests of the shareholders. The payouts for the 2022 long-term incentive program were at 200% of target, which is good news for those managers. They also have change in control agreements in place. Basically, this means if the company gets bought, the executives get a payout. Also, executives have the benefit of retirement plans to ensure an overall competitive compensation and benefits offering. This is a reasonable estimate, though there could be other factors at play. As of December 31, 2024, it has outstanding RSU, PSU, and PBCU awards awarded to the NEOs. They also aim to reduce greenhouse gas emissions. It is becoming something many companies are trying to pursue. All of their executives complied with the SEC rules on reporting their stock ownership, except for a few late filings. It is easily done by mistake. Finally, if you are a stockholder and you want to submit a proposal for next year's meeting, you need to get it in by November 17, 2025. So what is my take on Core Natural Resources? Well, it seems like they are making a real effort to align executive pay with company performance. The merger, while complex, appears to be a strategic move to dominate the coal industry. The high percentage of independent board members and the various clawback and stock ownership policies are positive signs. However, as always, the devil is in the details and investors should do their own research before making any decisions. Thanks for tuning in to Corporate Codings. See you next time.